raising his price target on Tesla to $350. So you actually raise, even though the stock is down and the market's worried about more price cuts. Why?
I think investors aren't seeing forest through the trees, because ultimately what's happening here, we're seeing a stabilization from a margin perspective, better than expected in terms of auto gross margins.
A $400 Tesla stock price valuation from Wedbush analyst Dan Ives was seen by many as overly optimistic. But for Ives, who previously called Tesla a golden EV success story, $400 is attainable. In fact, in a previous note to clients, Ives said, Tesla is in a massive position of strength after building its EV castle and now is set to further monetize its success. This can be proven true by the company's increasing ability to bring in revenue outside of EV sales.
You look at units, right now I think on a trajectory toward 2 million, and then this is the drum roll, the Super Bowl, to now what I believe is monetization of supercharger, battery, and I think last night the biggest thing from the conference call, FSD talking to another OEM, because this from an AI perspective is ultimately how I see Tesla getting to $1.5 trillion, $2 trillion
licensing
market cap.
FSD to another OEM. I mean, he said early days. It's never clear. We got no clarity on who it is or how far along or whether it may even come to fruition.
But ultimately, this is, for Musk, I think ultimately this is really the first step of what's going to be a broader strategy, because they've built it. I mean, if you look at FSD,
Full self-driving.
Full self-driving, and I'll argue, Sarah, that's AI. I mean, we could talk. It's basically AI for automakers. You look at full self-driving, you look what happened with superchargers, and ultimately now batteries. And I think the story's stabilizing from a margin perspective. The poker move massively played off from a unit perspective. And I think that's why this year, I think this is just the start.
In fact, as of this month, in light of this, after passenger vehicle sales dropped in June and July, the Chinese auto market recovered in August with a return to growth. In the same month, Tesla almost doubled its market share in the country, amidst increased discounts and tax exemptions that helped bolster consumer appeal. Passenger auto sales in China increased 2.2% year-over-year in August, according to data from the China Passenger Car Association, or CPCA. Reuters analysis showed that Tesla almost doubled its market share in China in the same month, jumping from a 7.5% market share in July to a 13.2% share in August. The CPCA data showed that Tesla sold 64,694 vehicles in China in August, while the automaker also delivered 65,316 Shanghai-built Model Y units during the same month.
Because if you look at the lower prices, sacrificing prices for demand, it paid off, not just in China, in the US. And I think what you're seeing right now with EV play out, you're starting to see this green tidal wave we viewed as the biggest transformation to the auto industry since 1950s. It's Tesla's world, everyone else is paying rent. And I think last night was just another chess move while other automakers sit there playing checkers.
What about the factory potential delay of shipments? That was something that was flagged on the call.
Yeah, and
is that a big deal?
Yeah, and that's one where, and to your point, a bit of a downtick, production offline from a manufacturing perspective. See, I view that as really what's going to be the start of a refresh for Model 3s. So I think that's a smart move, because you're going to have refresh of Model 3s, you got Model Ys, and then ultimately the Cybertruck, we think production starts around Halloween. I think we will start to see Cybertrucks on the road in the month of December.
Gigafactory Shanghai sold roughly 84,159 vehicles in August, marking a nearly 31% increase from just 64,285 units sold the prior month. For context, in July, overall auto sales in China slid 2.6% from the same month last year, following a 2.9% drop-off year-over-year in June. If this continues to happen this month, it would definitely be good for the company, its stock, and therefore its shareholders. Now, as China's EV competition heats up, Tesla is forced to cut the prices of its Model S and Model X cars in an effort to boost sales. The company lowered the starting price of the Model S to 698,900 Chinese yuan from 754,900, and to 738,000 yuan from 836,900 for the Model X. These are the two models already produced in the Shanghai Gigafactory. This comes 2 weeks after Tesla had already slashed prices for the premium version of these two models, which aren't built in China. Tesla also cut prices on its full self-driving FSD software by $3,000 in the US, lowering the price to $12,000 from $15,000, and by $3,500 in Canada from $19,500 to $16,000. In connection with this, Wedbush analyst Dan Ives looked at Tesla on a sum-of-the-parts SOTP basis recently. The SOTP valuation examines and tries to value the separate businesses within a company in an attempt to give a better price valuation of the stock. In another note to investors, Ives said, "To dive deeper into this sum-of-the-parts valuation, we modeled and projected out Tesla's supercharger network, taking into account access and revenues from other OEMs using stations across the United States. Ultimately, we estimate that Tesla's supercharger business will be roughly 3 to 6% of total revenues, translating to a $10 billion to $20 billion business by 2030. Ives wrote in the note that while the supercharger network opening to OEMs is a major part of the Tesla story, it is just one part, which implies that there are more. Strong production figures, a thriving energy business, continuous improvement on the side of the development of autopilot and full self-driving, an unmatched battery ecosystem, and increased production and scale scope are all contributing to a strong financial sheet for Tesla."
I think it's Tesla's world. Everyone else is paying rent. I think this is just the first phase of the growth story playing out. Monetization that we're seeing on supercharger. Eventually, what we believe is going to be battery. You look at FSD, that's the golden goose in terms of AI. And obviously, look, the Gerber Kawasaki team, thought leaders when it comes to the view of Tesla. And Nicole, I think this is the get out the popcorn moment to where this is all heading in this green tidal wave that plays out. But remember, it's not just going to be Tesla. You're going to have success stories like Rivian. You'll have VinFast. You're going to have some of these transformational, the Fords, the GMs, obviously some of the European players. There's going to be many winners in this $5 trillion green tidal wave.
Yeah.
Tesla's separate businesses in this case are its supercharging network, where the company recently signed deals with several automakers to open up its charging network. The company has an AI it uses to train its FSD software, which is likely to turn Tesla vehicles into robotaxis. Tesla also sells battery storage products to consumers and utilities, a business that grew over 220% year-over-year in Q2. Based on all this, Ives rates Tesla a buy with a price target of $350 a share within the next 12 months, which is a 35% gain from the current price of $258. However, Ives also noted that a $400 valuation can also happen soon. And speaking of what could work in Tesla's favor, an expert said that Tesla could be a big winner in case of UAW strikes. The United Auto Workers strike against the big three automakers, Ford, General Motors, and Stellantis, continues to loom as the deadline draws closer. In light of this, Nathan Bomey, Axios business reporter and co-author of Axios Closer newsletter, and David Madland, Center for American Progress Senior Fellow and American Worker Project Senior Advisor, joined Yahoo Finance Live to discuss the potential strike and its impact on the auto industry. Bomey said that there's a possibility of striking all three at the same time, and if that happens, we would see a serious bottleneck in the auto industry. He also added that Tesla would be the big winner if there is a big strike. The company would also be the winner if the automakers have to agree to huge pay increases because, of course, Tesla is not unionized. Anyhow, Tesla has a lot of things going for them, and it's great that it doesn't have to worry about a strike like Ford and GM. And speaking of those two legacy automakers, their partnership with Tesla is what Dan Ives believes to be a large monetization opportunity for Tesla. We believe Tesla is in a prime position to further capitalize on the EV transformation taking place as part of the government's plan to reduce carbon emissions to zero by 2050, Ives wrote in a note to clients. Ives also said that Tesla is in a massive position of strength after building its EV castle, and now is set to further monetize its success, pointing to the company's increasing ability to bring in revenue outside of EV sales. Tesla should net another $3 billion in new revenue from Ford and General Motors EV users, Ives estimated. Ives noted that earlier this year, Tesla agreed to add 7,500 superchargers to its network by 2024, more than doubling its current capacity of roughly 5,000. He suggests that the increasing number of deals with other automakers will accelerate its growth. He also noted that Tesla's trailblazing deal to share its supercharger network with Ford and GM is a money-making opportunity, and that its profits are likely to keep rising once it's able to roll out its full self-driving tech more widely. In fact, a long line of rival automakers have thrown in the towel and agreed to join Tesla's supercharger network. Ford Motor Company was the first to break with tradition back in May, and it was quickly followed by General Motors and Rivian. Several other automakers joined the trend in rapid succession, including Volvo, Polestar, Mercedes-Benz, and Nissan. In light of this, Tesla is set to access up to $20 billion in revenue from its recent supercharger deals with Ford, General Motors, and various other automakers, according to Ives. Overall, Ives sees the best point of comparison for Tesla as Apple in the late 2000s, when the iPhone maker's stock price didn't yet reflect its earnings potential. We view Tesla where Apple was in the 2008-2009 period, as Cupertino was just starting to monetize its services and golden ecosystem. Ives wrote in Thursday's research note, "We view this quarter as a major step in the right direction, as Tesla is playing chess while others play checkers." Tesla is one of the major winners of the AI-fueled tech stock boom. Shares are up 136% this year, adding $530 billion to its market cap and leaving it worth just over $900 billion. Make sure to subscribe to Tesla stock for more.